Idle dollars are dollars well above your emergency fund, okay? Second thing is that I want to cover is like, where are we actually putting these dollars? Like, where could, and you don't have to do, I'm not saying take all of your idle cash and move it over to what we're about to discuss, but a portion of that money even is definitely something to look into. So what I'm referring to is it's a safe private contract with an insurance carrier, okay? With these contracts, if they're set up properly, you have the ability to earn 3-4% IRR. So after taxes, or tax-free if you want to look at it like that, you're going to be getting anywhere from 3 to 4%. I mean, that competes with a lot of bank accounts, especially high yield accounts, and that's on a net basis. I'm not talking you're getting a 4% return in your high yield savings, but also you got to pay interest on that money regardless if you're planning to use it again. And remember, this is money that you weren't planning to use anytime soon. So why, to me, it just doesn't make sense to have all of your surplus cash in an environment where you're going to be getting taxed on it every single year via 1099, and you're not even planning on using it anytime soon. You just like the fact that you have, whether it's returned earnings or just whatever cash sitting in a bank account liquid, God forbid you do need to access it. Or maybe there's just a grand opportunity that pops up and you want to use that cash. Well, there's a better way to store that money and grow it with time, and also ensure that you pay less taxes on it and have more protection over that money. Okay, so that's the first thing, is like you get 3 to 4% on your money in these private contracts when they're set up the right way. And another thing too is the creditor protection on these contracts. And that's something, business owners, we don't think about is, what if we were to get sued? What happens to the money in our accounts? Well, it could go away. And with these private contracts, most states you get creditor protection. Meaning that if I had $100,000 in this contract, that $100,000 is protected against lawsuits and judgments. Again, it's different from state to state on how much, but that's something that you get with these contracts, is you get a whole nother layer of protection there, and that's just another, added peace of mind, if you will. So that's important. And then the other last point I want to talk about with these contracts is you also, because it's life insurance, you get a death benefit attached to these contracts as well. So imagine you have, just for simplicity, let's say it's the amount you decide I want to reallocate or reposition into one of these contracts is $100,000. Okay, and I'm not saying like that's all the money you have in this separate account, move it over. Just for the example, let's say it's $100,000. Well, when you put that $100,000 into this contract, you're going to get more leverage on that money via a death benefit. Just for simplicity, these aren't accurate numbers, I'm just using it for an example, is if you moved $100,000 in that contract, you might have $500,000 worth of death benefit. So when you pass away, there's going to be, more money passed on than if you just left that money sitting in a bank account. And on top of that, that money that gets passed via the death benefit, it's income tax free, which is huge. And it bypasses probate court, another big thing that we don't often think about. And with all that being said, you still will have liquidity like your bank account. If you need to access that $100,000 or whatever the amount is, you have the ability to do so. There's no 59.5 penalty like most traditional retirement accounts. You're not going to get whacked if you don't take money from that account. Like there's no RMDs with that either. So that's just something to just really think about, is like, is your idle cash truly in the best spot for you? And especially looking at a long-term perspective, when you add up how much in taxes via the interest that you're going to be paying on that idle cash versus another account where you're going to earn more than an idle account and you're not going to have to pay taxes on it and you still have access to it. So that's something, that was really the last thing I wanted to cover on this type of contract, is it gives you a lot of different benefits that you do not have with a traditional checking savings account, okay? Next, the next thing I want to cover, and this is so powerful with these contracts, is you have the ability to earn interest on the same dollar twice or in two different spots. And I'm going to break that down for you guys. So when you have money in a bank account, 100 grand, we'll use that as the example again. If there's a piece of machinery you need to buy for your business, or let's say you want to put money into advertising, marketing, you want to buy Facebook ads, you want to invest money in the Facebook ads to expand your business, and you want to make a $50,000 investment, okay? If you go to that 100 grand in your bank account, take the 50K, and let's say you're earning 4% in that bank account, well, when you withdraw that 50K to invest into marketing, now you only have $50,000 left in your bank account earning that 4% on it, okay? With these private contracts, the same 100 grand in that policy or in the contract earning 4%, 3%, 4%, let's say. If you want to use $50,000 to go invest in the marketing, what you can do with these contracts is you can borrow against the value in it. So you're essentially putting up your cash value, they call it, as collateral, and the insurance carrier that contract's with will give you a loan against it. So if I got 100 grand in there earning 3-4%, let's just say 4% to keep it apples to apples with the bank account, 100 grand at 4%, I request a loan against it for $50,000. The insurance carrier is going to wire that money to my bank account, and now I've got $50,000 that I can use to invest in the marketing. Meanwhile, my full $100,000 that I have in my contract is still earning interest on it. So I didn't deplete the value I didn't deplete the dollars rather that was earning that amount of interest on it. The bucket of money, I have the same bucket of money earning that interest rate versus the bank account example where it's like, well, if I need 50 grand from my bank account, I got to withdraw 50K and my principal, if you will, my account balance shrunk, and now I'm earning 4% on a less amount of money. And that's so powerful to grasp and understand, is that there are ways to where you can retain more money and keep more dollars ultimately to yourself by using a contract like this, especially if it's something you were already going to spend money on anyway. And especially if it's an investment where you're obviously expecting to make money. That's where it's really, really powerful. So for you business owners out there, if you're constantly financing things through whether it's bank loans or even paying in cash, just know there's a third option out there that could really help you out, which is using a private insurance contract. And not all of them are equal. They have to be set up a very certain way. Specific carriers are better than others. But assuming all that's taken care of, like, this is a very powerful tool that can enhance your business and give you more options, more flexibility, and just ultimately give your business a better foundation to work off of.